sentiments at the Treasury Bills market remain mixed despite the 45 billion naira OMO maturity in the system. Well, traders at Axis Bank say they expect cautious trading today as investors shift their attention to today's T-bills auction. Uzor Anakebe, FX trader at Axis Bank, joins me for a midweek update on market activities. Uzor, thank you for taking the time out to join us today.
Thank you very much for having me.
Let's get right to it. Bring us up to speed on today's trading action so far and, of course, overall sentiment of the market.
Okay, so money market, we saw the system liquidity opening at a repo of 24 billion. This is coming from 90 billion repo yesterday, and irrespective of the fact that we had 45 billion naira maturity or OMO maturity that hit the system yesterday. OPR and overnight rate was at 14.5 and 15% levels yesterday, and we expect rates to be at these levels in the money market today, barring any significant market activity. Looking at the T-bills market, we also noticed that yesterday, like I said earlier, we had OMO maturity of 45 billion naira hit the system yesterday, and today we expect the NTB to conduct we expect the DMO to conduct the NTB auction today, and we also anticipate that the OMO auction will be conducted by the CBN tomorrow. But irrespective, we've seen minimal activities across the curve with the most trade happening in the February and March maturities. And however, yesterday we saw that rates remains largely stable with much activities from the opening levels yesterday. We anticipate, like I said earlier, that traders will trade cautiously as they expect the results from the NTB auction, which we expect that will inch up slightly as appetite for market participants continue to increase.
All right, I was going to ask you about your expectations for today's NTB auction in terms of, are you expecting it to be oversubscribed, and what kind of rates can we expect?
Yeah, we expect that the market should be oversubscribed because we have, in as much as we expect it to be oversubscribed by some statutory participants in the market. However, we see that we anticipate that the rate will inch up slightly from the previous levels because market participants have appetite for higher yields, considering that MPR has gone up and the rates are going up and the inflation too. So most market participants are going for higher levels in this auction. And we anticipate that the rates will close at a higher levels than the previous auction, which was at 7.4 levels.
Well, I was going to ask you to give us a sense of where the short-term rates are, the 90-day, the one-year Treasury bills. I know there's been a gradual upward trend, but where are these rates now, and how much room do these rates have to climb?
So the short-term maturities are still at very low levels, and in the secondary market, these rates are trading at 6% handles, and but in the primary market, we expect these rates to inch up forward because if you look at what's happening at the secondary market, you see that these rates are going up. So we expect that even in the primary market, that they will take Q and move up slightly to catch up with this with the trend that people expect in the market.